Nobody tells you why you got denied. The letter says, "We were unable to approve your application at this time." That's not a reason. That's a form letter. Here are the actual reasons, all 8 of them, and what to do about each one. Loan denials feel personal. They're not. They're mechanical. A lender runs your application through a set of criteria. Each one is measurable. Each one can be improved. But you can't improve what you don't understand, and most people never get a clear explanation of what actually disqualified them, That changes today. Reason 1, credit score below the lender's actual threshold. There's the published minimum, and there's the real minimum. FHA loans publish a 580 minimum. Most FHA lenders add internal requirements, called overlays, that push that real minimum to 620, 640, sometimes 660. You could have a 610 score, technically qualify by guidelines, and get denied because their internal threshold is higher. Before you spend months targeting a score, call the lender directly. Ask what their actual minimum requirements are, not what the program publishes. That one call can save months of preparation aimed at the wrong number. Reason 2, debt-to-income ratio too high. Your credit score can be strong and you can still get denied because of DTI. DTI is calculated by adding all monthly debt payments and dividing by your gross monthly income before taxes. Under 36% is strong. Above 43% disqualifies conventional mortgages. Above 50% disqualifies most loan types. Your credit score doesn't show your DTI. A lender looks at both. Fix your score without addressing your debt load or income, and you may still get denied. Reason 3, too many recent hard inquiries. Every time you apply for credit, the lender pulls your report. That generates a hard inquiry. One inquiry has minor impact. 6 and 12 months tells an underwriter you've been repeatedly seeking credit. If you're preparing for a major loan application, mortgage, auto, business line, stop all new credit applications at least 90 days before. Longer if you've had multiple recent inquiries. It's not the inquiry, it's the pattern of financial stress. Reason 4, derogatory marks, collections, charge-offs, late payments. The type, age, and amount matter. A $200 medical collection from 4 years ago is not a $12,000 charge-off. Late payments carry more weight the more recent they are. A late payment from 3 years ago has significantly less impact than one from 6 months ago. What matters to the underwriter? Are there any derogatories from the last 12 to 24 months? Recent negative activity is the flag. Older items are less disqualifying. Reason 5, no installment history. Lenders, particularly mortgage lenders, want to see that you can manage both revolving credit and installment loans. If your profile is all credit cards, you have a gap. A credit builder loan from a credit union is the lowest risk way to add installment history. You make monthly payments, those payments report to the bureaus, and at the end, you receive the funds. The purpose is the payment history, not the product. Reason 6, insufficient credit history, thin file. If you're new to credit or live cash only, you have too little history. This isn't about bad credit, it's no credit. The fix takes time. 2 to 3 accounts over 12 to 24 months builds enough history. There's no shortcut here. Reason 7, applying to the wrong lender for your situation. A major bank is not the right first call for rebuilding. Credit unions and community banks have more flexibility. Being denied doesn't mean you're unqualifiable. Find the lender whose criteria matches where you are. Reason 8, employment or income instability. Lenders want stable income. A new job can be a problem if you've been there less than 90 days or 2 years for mortgages. Gig work and self-employment are averaged over 2 years. Fluctuations create uncertainty in the application. Here's the common thread across all 8. Getting denied isn't random. Every denial has a specific cause, and most of those causes are fixable. Most people get denied, feel discouraged, and either stop trying or apply again to the same type of lender with the same profile. Understand which of these factors is working against you. Fix what can be fixed. Time what requires patience. Want to know specifically what's affecting you? That's what the Blueprint Review is for. Private 60-minute session. We build the action plan around your numbers. Link in description. Subscribe for more credit hacks.